7 money habits that will ruin your year. Many personal finance specialists believe that the most recent economic crisis will reach home in 2023. If this occurs, the majority of people will probably have to deal with the coming effects of their poor financial practices. Fortunately, you don't have to be one of those people, since I'll be sharing 7 money habits with you in this video that you should put an end to in 2023. If you're new to the channel, click the subscribe button below for more content that can change your life. Habit number 1. Becoming at ease with taking up consumer debt. Many people will probably fall victim to the debt trap in 2023. This is due to how simple it is to get overwhelmed by a materialistic culture and accumulate debt. Sadly, the majority of people still believe that, even though they're well aware that credit card debt is one of the worst types of debt to have. I'll admit that credit cards are incredibly convenient, but they can also lead to money issues. This is due to the fact that people abuse them by using them excessively and charging them for amounts that they cannot afford to repay, which increases interest costs and signals oncoming financial ruin. One of the worst financial blunders you can make, in my opinion, is to grow accustomed to having consumer bills. One of the things that separates these two socioeconomic categories is that poor people frequently become caught in debt in their pursuit of the American dream, while rich people can easily afford to pay off their loans. It's really too bad when people give up their desire for financial independence in favor of comfort and debt. But as a boss, you must guard against this from happening to you. Avoid taking on further debt and instead concentrate on getting yourself out of any debt trouble you may already be in. People must constantly remind themselves that they are not dependent on debt to meet their necessities. You can build wealth, but doing so requires you to eliminate all consumer debt, such as credit card debt. Debtors often find themselves compromising on their financial objectives. Always bear in mind that managing your money is equally as important as managing other aspects of your life. Do not compromise on your financial goals if you find yourself in debt. Instead, stay tough, examine your spending, make cuts where required, and of course, create a budget. You should also educate yourself on the different types of debts. There are debts that are considered good debts, since you can utilize them to make an investment or business opportunity. And then there are bad debts, which are typically spent for useless items. And if you can avoid the latter, you'll be avoiding a critical error that, regrettably, most people will be doing in 2023. Habit number 2. Prioritizing yourself last. The majority of people have the bad habit of prioritizing themselves last. This is such a bad money habit that will ultimately lead to poverty. Make it a point to pay yourself first as soon as you receive your paycheck. But first, let me clarify what I mean by paying yourself first. In this video, I'll explain, so stick with me. Paying yourself first simply entails immediately beginning to set aside a portion of your salary for savings contribution as soon as you receive your paycheck. This should be done even before you pay your other bills and expenses, and it's a good practice for everyone to get into. Otherwise, you run the risk of not having anything left over when everyone else gets paid, and that just won't do. Basically, whether it's a large sum or a tiny amount, set away money for yourself every time you get paid. You can choose how much. However, I personally advise a minimum of 30%. Habit number 3. Spending without keeping track. One of the deadliest habits that many people have formed over the years is spending money without tracking. However, if you find that you share this habit before the video is over, hopefully you'll see why you just cannot carry on living that way. The issue here is that the majority of people don't truly grasp their expenses, meaning they have little to no concept of how much they spend each month. These are the primary causes of why the majority of people develop poor financial habits, including excessive spending and insufficient saving. It will be quite challenging for you to conserve money or reduce your spending if you have the little understanding of your expenses. You must maintain track of your costs if you want to lay a solid financial foundation for the future. This makes it simple to cut costs where they are essential, and if you don't have any planned contributions to your savings, You'll just keep up your current spending patterns, which, based on my assumption, haven't gotten you as far as you'd like financially. Remember that there are various methods for keeping tabs on your spending. There are electronic tools available now that will help you track your costs without a lot of fuss, in addition to the straightforward pen and paper method, which is still used by majority of people. Before you go into any strategy, it's important that you have a firm understanding of what you're doing. It is best to attempt and learn how to track your expenses properly first before you start tracking your own spending. Whether you use pen and paper or electronic tools, if you aren't very good at it now. Knowing where your money goes is crucial for maximizing your future wealth and enabling you to make wise financial decisions. Habit number 4. Managing your investments manually. Many traders and investors still conduct online trading the old-fashioned manner, manually. This approach takes a lot of time, and some traders may find it to be quite complicated. And if this describes you, it's time to enter the 21st century and finally step up your investing game. You may do this by employing automated trading programs. In essence, you may make a lot of wise and effective long-term financial decisions by using automated trading services and applications to handle your investments. Let's face it, failing to maintain track of your investments can result in a variety of issues. And if this happens, you may find yourself in needless suffering because you fail to constantly monitor your assets. Your investments will lose money, possibly all of it, and you risk having nothing invested at all. Consequently, dealing with a lot of information at once is required when trading. It makes sense that current computerized trading platforms, which a lot of people already use, have replaced manual investing. These automated trading platforms offer a wide range of charting tools and robo-advisor trading signals. You won't have to worry about managing your own money while using these automated trading solutions because everything will be handled for you. Additionally, you have the option to do nothing but sit back and unwind as these automated trading platforms manage all of your trading and investment transactions. The stress that comes with manually trading online can be reduced by automating your investments. But this doesn't mean you should leave everything to automation. You still need to keep an eye out for signs that your investment techniques need to be adjusted. Habit number 5. Paying excessive taxes. You probably don't fully grasp how taxes operate, like the majority of people, and you should try to break this poor habit. Many individuals believe that paying taxes to the government only applies when they are employed and receive a paycheck. However, taxes can still be deducted from your income even if you are unemployed. The main problem here is that most people pay more tax than necessary since they are unaware of how much tax they are actually paying. Knowing how you are taxed is advantageous since it might increase your sense of financial stability. So, what is the most effective strategy for accomplishing this objective? Keep watching and I'll go into more detail. The first thing you should do is figure out your projected revenue for the year. This sum will give you a general indication of how much you will owe in taxes at the federal, state, and municipal levels since it represents the average person's yearly wage. Using these numbers as a starting point, you can create a strategy to minimize those debts as much as feasible. For instance, as an employee, you can make contributions to your employer's 401k plan to lower your current tax liabilities and perhaps even qualify for an employer match if you operate your own business. To save money both now and in the future, you can look for bigger deductions or different tax structures. In other words, the more you are aware of the taxes you are paying, the more you can do to reduce or eliminate them. Habit number 6. Giving in to the lifestyle creep. You must resist the dangerous tendency of lifestyle creep at all costs. When starting to change their lifestyle, a lot of people frequently run into this issue. Lifestyle creep is a practice of increasing your spending as your income rises. Sadly, many with higher salaries find this to be a bothersome problem. If you fall into this category, you might need assistance stopping this harmful behavior before it gets out of control. The greatest approach to prevent lifestyle creep is to closely monitor your spending. It's safe to assume that if you're having trouble paying your bills right now, you'll have to quit spending money altogether shortly. As your income increases, you should actually aim to maintain your spending patterns and let the spread broaden as much as feasible. One of the best methods to break this bad financial habit is to keep track of your expenses in relation to your income. I mentioned this in habit number 3, but I'll say it again. Keeping track of every dollar that leaves your pocket, whether on a piece of paper, in your phone, or in a spreadsheet, will greatly lower the chance that your wealth will be compromised by lifestyle creep. Habit number 7. Not developing your marketable talents. We all possess specific abilities and information, but tragically, the majority of people don't use these resources to boost their income. In other words, people either lack marketable abilities or do have them but don't take advantage of the opportunity. For individuals who don't have a marketable skill, it's probably because they didn't put in the effort. Instead of learning a new talent that could transform their financial destiny for good, they would rather spend 4 hours each night watching Netflix. On the other hand, people with great abilities frequently don't know how to use them to increase their income, which causes them to stagnate in their pursuit of wealth. No matter what position you're in right now, try to sell your skills for money. Choose a skill you enjoy. I'm promising you that if you do this, 2023 will be your year. Hey, it appears that YouTube feels that this upcoming video will eternally alter your financial situation. Watch it and let's find out whether they are right.